Good morning, everyone, and happy Friday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back. Thank you all so much for being here, and TGI Friday. I hope you have some fantastic weekend plans lined up, even if it's just relaxing at home. As usual this morning, we'll be taking a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. Don't forget to follow the links in the descriptions down below to get the TipRanks mobile app on your Android or Apple device so you can access all of your favorite research tools on the go. Now let's jump right into this morning's exciting stock market news. We are ending the week off with U.S. stock futures mixed. Currently, Dow futures are down 0.12%, but S&P 500 futures are up 0.14%, and Nasdaq futures up 0.52%. Google parent company Alphabet is the latest big tech company to announce layoffs as they look to slash about 6% of their global workforce. The Google stock is actually up a few percent this morning following the announcement that they would be cutting about 12,000 jobs. In an email from the CEO, they said that he takes full responsibility for the decisions that led us here, and these are important moments to sharpen our focus, re-engineer our cost base, and direct our talent and capital to our highest priorities. Wall Street analysts do currently rate the Google stock a unanimous strong buy with an average upside of over 35%. Playtika has offered to purchase mobile game maker Rovio Entertainment, who's behind popular games such as Angry Birds, for $810 million. Playtika had initially made a bid on Rovio back in November, but has now come back with a higher price. They said in a press release that there is no agreement between Playtika and Rovio, and there is no assurance that any transaction will materialize or be completed. The Playtika stock is currently rated a moderate buy with an average upside of 59%. Shares of Nordstrom are falling this morning after the company cut their 2022 earnings expectations. They said that significant markdowns offered in the season hit the bottom line, causing the company to cut their full-year adjusted earnings per share guidance to a range of $1.50 to $1.70, down from $2.30 to $2.60. They said that the holiday season was highly promotional and sales were softer than pre-pandemic levels. The stock is currently rated a moderate sell with an average upside of 7%, with the most recent downside coming in today. And the FDA has rejected Eli Lilly's accelerated approval submission for their Alzheimer's drug. In their response letter, the FDA has demanded trial data with at least 100 patients who took the drug continuously for a minimum period of 12 months. The pharma company had not submitted enough trial data from patients who were given the medicine for at least a year. The latest development will likely push the drug's launch by several months. The Eli Lilly stock is currently rated a strong buy with an average upside of nearly 14%. Now moving over to notable earnings reports. Not much happening in the after hours for Friday, but last night we did hear from Netflix. Their stock is on the rise this morning despite missing earnings expectations as subscriber growth fuels the stock. Netflix added a net 7.66 million subscribers globally. They had expected 4.5 million, while Wall Street was already more cautious, expecting 4.1 million. Also, their co-founder Reed Hastings gave up his co-CEO position. Netflix reported revenue of $7.85 billion, which was up slightly year over year and in line with expectations, while their earnings per share of 12 cents was 38 cents shy of expectations. Analysts do currently rate the stock a moderate buy with an average upside of about 8.8%. In the pre-market this morning, we've heard from SLB, the company formerly known as Schlumberger. They beat on both earnings and revenue and also increased their dividend by 43%. Their earnings per share of 71 cents beat expectations by 3 cents per share, while revenue of $7.9 billion grew 27% year over year and came in $110 million ahead of expectations. Analysts currently rate the SLB stock a strong buy with an average upside of over 5%. And also beating expectations with their quarterly report this morning was Ally Financial. Their revenue came in at $2.2 billion, which was flat year over year, but $140 million ahead of estimates, while their Q4 earnings per share of $1.08 beat expectations by 7 cents. Analysts currently rate the Ally stock a hold with an average upside of about 2.6%. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainer this morning is New Oriental Education. The stock has been growing steadily all week as it surpasses analyst price targets and reaches a new 52-week high. Trading under the ticker EDU, the stock is currently up 6.2%, following growth of 9.6% yesterday. And our biggest loser this morning is Faro Technologies, after the company proposed a $60 million notes offering. Trading under the ticker FARO, their stock is down 18.7%. So that is going to be everything for Friday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. I hope you guys have a wonderful weekend, and if you made it to the end, don't forget to say good morning in the comments. I really appreciate hearing from you guys, and share the video with some of your friends. Thanks so much for watching. Have a great day, and I'll see you back here on Monday.